The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chair, for holding this hearing, and thank you, Chair and Secretary, for appearing before the committee. And like my colleagues, Chairman Powell, congratulations on your renomination for another term. I would acknowledge to you, I'm not sure the President did you a favor, but thank you for being willing to do this again. That said, let's talk about a number of issues, and I'll try and roll through them in some sort of a concise fashion. Since the onset of the pandemic, the United States has added more than $5 trillion to its total national debt, standing at about $29 trillion. And as the Secretary's alluded to, apparently we need to raise the debt ceiling very soon to address that even. And that doesn't count the extra trillions that have gone on the Federal Reserve System's balance sheet. The U.S. is now set to exceed the debt-to-GDP ratio not seen since the end of the Second World War. Chairman Powell, speak to us from a macroeconomic perspective. When's the right time to prioritize the threat of U.S. debt rapidly outpacing economic growth? We've spent a lot of money in the last couple of years.
And, you know, as I generally would say, and as is appropriate, I think, for me to say in my role, the U.S. needs to get back on a sustainable fiscal path. The right time to do that is when the economy is strong, when the taxes are rolling in, when employment is high. And the right way to do it is to have a longer-term plan to get to get the economy growing faster than the debt. By definition, it's unsustainable to have the debt ultimately growing faster than the economy, and we have that now.
Chairman, you and I were both young men in the Carter-Reagan period under your predecessor, Chairman Volcker, when we went through an inflationary cycle that was even more horrendous than this, and the effort that it took to bring that period to a conclusion. I guess I'd like to visit for a moment just about the fundamental issues. Again, not addressing particular legislation, just the fundamental issues. The amount of money through congressional activity that we put into circulation. And in 2020, I think in a bipartisan way, we voted an incredible amount of money out of this place because the wheels were coming off in the spring and summer of 2020 with COVID. And no one wanted to return to a 1929, 1941 period. So we were willing to do whatever it took. But that now brings us to this point of addressing inflation and getting a grip on that. Could you describe how policy, and I know you don't comment on legislation, but how policymakers at the Fed evaluate the results of these kind of forecasts on the economy?
So what we're really looking at is so many things cause inflation, but really it's an imbalance between supply and demand in the real economy. That's what it's about. And you know, we actually see fiscal stimulus, the stimulative aspect of fiscal policy is actually declining and will turn into a headwind next year. You got to distinguish between the change and the level, if you will. So as deficits are coming down overall, you're going to see less in the way of fiscal stimulus to grow off of this high level of growth that we have. We had a very stimulative 2020, if that makes sense.
So the buzz will lead to a hangover, yes.
So, you know, what we're looking at is another strong year next year. Most forecasters see strong growth, but they also see the supply chains getting untangled, and they see the economy, you know, supply side rising to meet strong demand. And we see inflation coming down. Again, it's not a certainty, it's a forecast.
But the balancing act of policymakers, as the supply increases, we still have to address the money that's available to chase those few resources, or this process won't come to an end. Turning to you, Secretary, we've discussed, several of my colleagues have climate-related issues. I am concerned, coming from a district that produces lots of different forms of energy and consumes massive amounts of different forms of energy, that when the majority can't pass a bill to outlaw certain forms of energy, and they can't pass a bill to tax it to death, that the route they're going to take is use regulatory policy to strangle the capital available to those industries. Could you touch on that for a moment? Is it the intention of the regulators to create standards such that banks cannot support any particular energy industry that may ask for capital, that may justify a loan?
Well, as chair of FSOC, I would say our focus is on financial stability and the regulators like the Federal Reserve are focused on safety and soundness of institutions, and that means making sure they hold adequate capital to
There's a fascinating
manage the
report from the New York
risks.
Fed.
It's
you-
not
I
a,
hope you'll review. With that, I yield back, Madam Chair.
Thank you very much. The gentleman from
We have been
Illinois,
listening and watching the testimony of Fed Chair Jay Powell and Secretary of Treasury Janet Yellen for a second day on Capitol Hill, this time on the House side before the House Financial Services Committee. The topic was undoubtedly inflation. It came up again and again and again, with Chair Powell reiterating what he said yesterday, which is that inflation, in fact, is more persistent and broader than what they had anticipated, which warrants at least they're considering in 2 weeks moving faster on tapering their bond purchases. And then they went on to a debate about Build Back Better, whether that makes it better or makes it worse, whether it's being paid for, and whose fault all this inflation was. In the meantime, although the talk was very similar yesterday, the reaction in the equity markets is very different, where equities are really up today. On the other hand, on the bond market's a little bit similar to what we saw yesterday, where the 2-year yield remains elevated in its yield, while the 10 is really pretty much the same. And now we're going to return once again to the hearings on Capitol Hill with Chairman Jay Powell of the Federal Reserve and the Secretary of Treasury, Janet Yellen.
Itin holders are finally able to access these vital benefits in the American Rescue Plan. More than half of Latino children have at least one immigrant parent, and at least 90% of these children are U.S. citizens, meaning they're entitled to these benefits, but they often can't get them. The question for you, millions of ITINs have expired at the end of last year, and the ITIN process is plagued by delays. Sometimes the IRS holds on to original documents for months, a terrifying prospect for an immigrant family. What are Treasury and the IRS doing to streamline the application process for ITIN filers?
well, I can get back to you or have my staff with greater detail on this, but we have been trying to speed the delivery, for example, of the child tax payments to individuals who didn't file a return in either 2019 or 2020. Many ITINs may be in that category, and it's been an objective of our outreach to make sure that there are tools available to apply for those payments. We made an application available on mobile devices that's in Spanish as well to try to make sure that they receive the payments they're entitled to. But I'd be glad to get back to you with more detail on this.
Thank you. I will take you up on that and follow up with you and your folks. Data shows that Latinos are less likely than whites to report receiving monthly child tax credit payments. This is disturbing since Latino children are more likely to live in poverty. What can Treasury and the IRS do to monitor the success of the tax credit in the Latino community, and what can Congress do to ensure that the tax credit reaches everyone that's entitled to it?
Well, I would just say that we have tried through an extensive outreach program to make sure, and working with members of Congress as well, to make sure that there's awareness, especially in low-income and minority communities, of eligibility for these payments, both the child tax, especially the child tax payments. And it's a question of getting the word out and making sure that families know how to apply.
And do you think that members of Congress have any other role to help ensure that everyone who is eligible gets it?
We have asked members of Congress to help us get the word out. The IRS has had an extensive outreach program, but certainly members of Congress can help publicize the availability of these benefits in their districts.
Thank you, Secretary. I look forward to following up with you and, of course, working together to ensure that these benefits reach every community in this country. Thank you, Madam Chair. I yield back.
Thank you.
Thank you. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. Chairman Powell, congratulations on your renomination. I look forward to working with you over your next 4 years. Also, Mr. Chairman Powell, the Fed oversees 753 financial institutions for compliance with numerous measures related to the safety and soundness of the banking system. If one of those institutions chose to not follow a law passed by Congress or a rule the Fed promulgated, the Fed can take a myriad of enforcement actions, including cease and desist orders, removal and prohibition orders, and monetary policies. In other words, if you break the law, there are consequences. Is that not correct?
That's correct.
Thank you. Secretary Yellen, do you believe the Fed should punish those entities when they decide not to follow the law? Do you believe that the Fed should punish those entities when they don't follow the law, those banks, if they're not following the law?
I guess if they don't follow the law.
Thank you. Or if you're going to hold the banks and society accountable to the law, then should we also hold cabinet members accountable when they do not follow the law?
Yes?
Thank you for that. Chair Yellen, I am the ranking member of the Small Business Committee, as you well know. The CARES Act put the Secretary of the Treasury in charge of the PPP program. You, by law, were supposed to show up by the end of April 23rd, which is now 222 days, over 7 months, and you have yet to grace the threshold of that committee hearing room and give your report. Why do you continue to ignore and thumb your nose at the Small Business Committee and your job to adhere to the law, which you just said is important as a cabinet member?
Look, I believe that congressional oversight is very important and that Congress and committees should be partners with us in serving the American people. I have, over the last 10 months, testified 12 times.
Madam Chair, Madam Secretary, with all due respect, you are not answering my question. It's very specific. Yes, you've been able to accommodate every other committee on this Hill, except the Small Business Committee, which you are required by law to show up to. Why are you not there?
Well,
Very specific. Why are you not at the Small Business Administration?
I do have the ability to delegate responsibilities.
You have not
and I
delegated
have
to anybody yet.
authorized-
There is nobody that's showed up for 222 days now.
I have offered my Deputy Treasury Secretary to testify before the committee.
Madam Chair,
and
again,
that
Madam
is
Secretary, with
something
all,
that I
between
do
my time,
have.
with all due respect, you do not delegate an authority like that. You are required by law to show up. You have spent, as you just said, multiple times, you have been to other hearings across the spectrum of the House and the Senate, and you refuse to come to the Small Business Administration. Is it beneath you to show up at our committee hearing? Against the law, by the way?
You know, the Treasury has had, during the Biden administration, essentially no role in the Paycheck Protection Program.
Well, that's a problem for the Biden administration. That's not the problem of the, it should be, you should be doing your
Small
job.
Business Administration that has responsibility.
No, it does not, Madam
for
Chair. With all due,
conducting-
Madam Secretary, with all due respect, it does not. The CARES Act gave the Secretary of the Treasury authority over that. I spent 2 or 3 weeks, the leadership team of this committee, working with Secretary Mnuchin to put that plan together. It is in your purview. It is in your district. It is your job to oversee that particular program. And it's your job to be able to report on it as per the law. You just thumb your nose at the law over and over again. It can't continue. When are you going, there, as you just said, there should be consequences to cabinet members who do not follow the law. Amazing. It's breathtaking. I've got about a minute left here, so let me move on real quickly here. Chairman Powell, I'm very concerned about the continued investment in China by all of the folks in this country, the investment folks, and to me, it falls under monetary policy, but I'll see what your opinion is here. As we continue to throw more money in the economy, it seems like there's more and more money that's shifting over to China, investing in the Chinese bonds, they're investing in their companies, they're investing in their securities. Are you alarmed by this at all? By our investing in China and their economy, which would be competing against us, and will have a direct impact on our economic ability to survive down the road?
Mr. Lukemeyer, we really don't have a role in that. That you maybe think, I mean, the SEC would have a role if investors are investing in Chinese bonds and things like that. That would really be an issue for the SEC, but not so much for us.
Okay, are you concerned about it all, the level of investment over there?
I'm mostly concerned about inflation and stable prices and maximum employment here at home.
Okay, well, that investment, I think, would have a dramatic impact because of the money flowing there versus it's flowing back here. To me, it would be able to set up our own supply chains over here to be able to be more helpful. Thank you very much. I'll get back.
Thank you very much. I'd like to thank Secretary Yellen and Chair Powell for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for their inclusion in the record. With that, this hearing is adjourned.
For Bloomberg Television and Radio, we have been watching and listening to the second day of testimony from Jay Powell, the chair of the Federal Reserve, as well as the Secretary of Treasury, Janet Yellen, up on Capitol Hill. This day was in front of the House Financial Services Committee. And once again, the subject was largely about inflation. We heard a lot of other discussions there at the end about whether she should come up and testify before the Small Business Committee. But really, the subject today has been about inflation. To a remarkable degree, the chair of the Fed did not back off of what he said yesterday, which is it is more persistent and it is broader than what he anticipated. And that warrants at least considering a course change for the Federal Reserve, moving up perhaps by a few months, the end date for when the tapering happens after just announcing that a short time ago. And then the hearings invariably went off on whose fault was it? Where did it come from? Was the fiscal stimulus passed by Democrats that had been excessive? Well, and the Build Back Better plan. Does it make sense to have the Build Back Better plan? Would that just exacerbate the inflation that the chair had been expressing concerns about? We want to bring now in Michael McKee, who is our Bloomberg International Economics and Policy Correspondent. Mike, thanks so much for being with us. I think we need to start with inflation here first, Mike. I must say, sometimes you see the chair go up the second day and sort of pull back a little bit. I don't think I heard that today.
No, it just reinforces the idea, David, that the Fed was sending a message to the markets yesterday. They want the markets to absorb the fact that they're going to probably at the December 15th meeting speed up the taper and finish it earlier to give themselves a chance to raise rates earlier if inflation sticks around and they need to. It's not their base case forecast, but they don't want to be behind the curve. They're going to have to wait and see what happens with the Omicron variant and with the virus in general, but they have 2 weeks to find out more about it. And if nothing particular changes, they will go ahead with this pivot.
Mike, one of the things we saw yesterday were the markets reacting. Equities really sold off. We also saw the yield on the 2-year rise, the yield curve overall flatten. Today, equities are up just about as much as they were down yesterday. At the same time, the yield on the 2-year was up significantly. One of the things I noticed was Chair Powell went out of his way to say he does not believe that the tapering he's talking about coming off the monetary stimulus will necessarily be disruptive to the markets.
Well, it's a period right now where we're seeing a lot of volatility in markets, part of that due to repositioning for the Fed and part of that due to the virus and other things that are going on. But it does appear that between the 2 days, the markets have sorted themselves on the Fed. They knew this was coming. At least many people predicted it, and an awful lot of people on Wall Street have been calling for it. So they got the purge out of their system yesterday, and now they're repricing. As you mentioned, the 2-year higher. What's happening with the yield curve is exactly what you'd expect, with the 2-year moving higher in concert with what the Fed's interest rate plans might be, and the 10-year moving lower. So the yield curve flattening is what the Fed would have expected. And it does look like they have absorbed the idea of what the Fed is going to do.
Chair Powell has been consistent in saying, let's wait and see what the data show in the next 2 weeks before the next FOMC meeting. What sort of data are we looking at? I saw Chair Powell talk specifically about wage price spiral. He doesn't see it now, but that's a possibility. We've got jobs data on Friday. What other data are they going to have?
Well, the jobs data will be key in both the Fed looking at what average hourly earnings do and also the dispersion of earnings, who's making more money. And they're also going to be looking at the labor force participation rate to see if more people are coming into the labor force, which might ease wage pressures down the road. Then the other big number that we're going to get is the CPI, which comes out on December 10th. And while it's not the index that the Fed follows as its guide, it is going to tell us an awful lot about the evolution of inflation and whether or not we're still seeing very broad-based price increases that are likely to continue. So the Fed will have those two numbers plus the usual data on other aspects of the economy. Retail sales come out the day of the Fed meeting, and they'll have a better idea of just where we might be. But the most important numbers are going to come from the CDC and those people as they find out more about what's going on with the Omicron variant.
So, Mike, one last one on inflation, since that was the topic for pretty much all these 2 days of hearings. We heard Chair Powell say that he continues to believe that inflation will come back down in their range by the latter part of next year. If that's true, if he's really confident of that, why does he need to accelerate the tapering?
Well, the Fed wants to have optionality, and they can't really start raising rates until they have finished tapering, because you'd be adding stimulus with one hand and taking it away with another. That wouldn't make any business sense at all. So the Fed would like to get this done. They know they're not adding anything to stimulating the economy. The Fed's job is to stimulate demand. And as Powell grudgingly somewhat admitted over the last couple of days, they don't need to stimulate more demand. Demand is very strong. So they move back a little bit on this. And then if they need to, they can react to inflation. Doesn't mean that they're going to necessarily raise rates right away, and I would suspect the Fed isn't going to hint at that, but it does give them the chance to do so if the inflation scenario doesn't develop as they have been assuming it will.
Yeah, optionality, as you said. Thank you so much for being with us. That's Bloomberg's Michael McKee. And now we have a programming note. Cleveland Fed President Loretta Mester joins Bloomberg Daybreak Asia tonight at 6 p.m. Eastern Time in an exclusive interview. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're into another busy December for Congress, with government funding, government debt ceiling, and the president's social spending program just some of what is in front of it. For the Republican perspective on what's likely to get done, we welcome now Senator Mike Braun of Indiana, a member of the Senate Business and Budget and Appropriations Committee. So, Senator, thanks so much for being with us. Let's start with the first up, because we've got a deadline on the funding the government. It's just 2 days away now, this coming Friday. As I understand it, there now is some question, you may be involved in it, about whether you may say, we're not going to fund the government unless you agree to do away with some of those vaccine mandates. Tell us your position.
So number one, so all the viewers know, this is the budget and the spending that we should have had done by September 30th of last year. The dysfunctionality, David, for a guy like me that has lived with budgets, always had to live within your means, we keep kicking this down the road. It's part and parcel of why we have this huge amount of debt. We don't do budgets anymore. We get into these deadlines. Everybody tries to use them to get whatever they're interested in across the board. So nobody's wanting to shut the government down. That's not going to happen, period. It will give people the opportunity to talk about what's important, maybe some of the underlying reasons. I suspect that CR will get done, but it's symptomatic of a broken system. You cannot run the biggest business in the world like we do here that takes the processes that used to work. We've only done a budget, I think, once in the last 20 years, and that's when we had the no budget, no pay provision tied alongside of it. It's irresponsible. So the other thing on the vaccine mandate, when I hit the street back home, that has been the biggest anxiety for especially Main Street businesses. They've all been really good at keeping their employees and customers safe. They did not need either you get a vaccine or you lose your job. Even 2/3 of Democrats think that's crazy policy. So I'm leading the Congressional Review Act, which is going to put every senator and representative on record. Are you for that kind of nonsense? It took me only 2 weeks to get every Senate Republican on it. That'll be the key tool we use to put it out there in front of the public on that crazy idea of either get jabbed or lose your job. The vaccine's a blessing. Lucky we have it along with other therapeutics now, but not with that kind of heavy hand of overreach.
Because this is important, I want to be absolutely clear because there's been conflicting reporting on this. As I understand what you're saying, with respect to the vaccine mandate, you think the right vehicle for that is the Congressional Review process, which does not have a deadline of tomorrow at all. So you would not hold up the funding of the government tomorrow, on Friday for the vaccine mandate issue.
I want to be clear, we should never be shutting the government down. And by the way, whenever that happens, the Republicans are left holding the bag or get blamed for it. So that doesn't mean that you can't try to extract some votes and to make your voice heard in the process of doing it. So it happens every time I've been here. I generally vote against the CRs anyway. I vote against any of the dysfunction that represents why we don't have budgets anymore and why we're in the pickle that we're in out of principle. It'll get its way through. And like I say, shutting the government down is crazy because we always get blamed for it. And I don't think that's a productive way to do it.
So part of the process that you objected to is the debt ceiling, how we're handling the debt, partly because you object to how big the debt is and how big it's grown just in recent times. So give us a sense of where the debt ceiling is right now. We've heard in testimony now up on Capitol Hill this week that it's December 15, maybe a little bit after that, but something like December 15, we run out of money.
I think that is real. And you got to remember, with the help of 10 or 11 Republicans, that extension was made, and it was clearly done a couple months ago that you were complaining about not having the time. And I think where most Republicans are standing strong here is both Republicans and Democrats, I want to be clear, are responsible for the mess we were in pre-COVID. During COVID, we passed bipartisan legislation that had almost unanimous support from Democrats and Republicans. It's the Rescue Act. It's the Build Back Better Act, and this additional spending spree that we would have our fingerprints on if we go along with raising the debt ceiling when they can do it with no Republican help through reconciliation. And we gave them the time to do it, David. So hopefully they've got a plan, or else it's on them, not us.
So I think a lot of people are concerned about the debt, without a doubt. But now, speaking to you as a businessman, your experience must be, as mine is, when you really try to address something like this, it's not enough to say, let's raise the top line. You got to really cut costs somewhere. And throughout that entire process, including the bipartisan, there was not a lot of cutting costs anywhere. Cutting costs is painful. Everybody has to pony up. It can't come from just one side or the other. Is there any movement right now on Capitol Hill to take a hard look at the cost side of the equation?
Zero. We actually met with Penn Wharton and taxpayers for a responsible federal budget, Maya McGinnis, yesterday, and looking at what probably will happen with the Build Back Better. Of course, it's being scored at $300 to $400 billion in terms of a deficit cumulative over 10 years. That's assuming that none of the stuff is extended, which it always gets extended. It never gets reversed. That's $2.8 trillion. So, David, no. We are spending like drunken sailors. They at least spend a paycheck and don't borrow the money. And in the little under 3 years I've been here, we've gone from 18 trillion in debt to now close to 30, which puts us above post-World War II era, when we were savers and investors, paid it all off, built the interstate highway system. We're consumers and spenders now. That even makes it worse. So Jerome Powell had to backpedal today, saying that inflation is probably not going to be transitory. That cost push kind of inflation that drove things back in the Jimmy Carter days, it's kind of back again. and along with what bureaucrats have done to kind of kink the supply chain, who knows where that biggest tax of inflation starts to ebb. So a lot of issues out there, and it all gets kind of reconciled with just more and more debt that we put on the shoulders of our kids and grandkids. No other business, no other government, nothing works that way without the day of reconciliation sooner or later.
Senator, I wonder, as a Republican, are you concerned at all that if you really hold tough, if I can put it that way, on the debt ceiling, that it may come back and bite Republicans in future times? Because in the past, the debt ceiling has been extended, no specific number given, extended on a bipartisan basis again and again and again. Are you worried that this might be a breakdown of that process and next time you may be on the receiving end?
I think we're at the level where it's gotten so heightened in terms of consequences. And I think maybe Republicans had the epiphany here a couple months ago when we did cut them slack to do it through reconciliation, to give you all that time. What has Schumer done with it other than frittered it away and now wanting to bring Republicans back into the equation? It would be different if on the Build Back Better bill and the rescue bill, there had been one Republican vote. And there is a responsibility, like I said earlier, but I think sooner or later you got to draw the line. When are you going to start cutting expenses? When are you going to quit borrowing all this money? And the debt ceiling will get raised, and the Democrats will do it because it's a difference now between what it was. Both parties are to blame to where we were through 2020, and we both went in there and I think did some of the things that needed to be done. We spent too much money in borrowing all of it again, even with the CARES Act and other stuff. That day of reckoning is getting closer. And by the way, we completely bust through the Medicare Trust Fund. Healthcare costs are big drivers in our structural federal deficits anyway. That now happens in 4.5 years. We'll probably stick our head in the sands until then and be looking over the cliff and be in a similar position we are now.
Senator, finally, one last question. We've got some nominations coming up there in the Senate. I understand that it's early going when it comes to Chair Powell as well as Lael Brainerd on the Fed side. I don't know where you are in that process, but it's much farther along with Professor Omarova, who's become something of a controversial figure up there. Where does that nomination sit from your point of view?
I think that nomination is falling apart, and it's due to at least 4 or 5 Democrats that have declared they're probably not going to be on board. So that's only happened with 1 or 2 other nominees along the same, journey of getting nominees, approved. So this one looks like it's not going to make it, and probably for good reason. I think she's on record with some stuff that would be hard for many to take, obviously, even within her own party. When it comes to Jerome Powell, I've met with him, talked to him several times. He at least has made the pivot to where he's being realistic on what the Fed's going to have to do with inflation. And obviously that means at some point we're going to probably have to raise interest rates, do the things that, let's just look back to what it took to wring it out in a similar fashion back in the early 80s. That's just when I started. I've got terrible memories of having a home mortgage at 10%, and then business loans were close to 20% early into the 80s. And we got so much debt embedded into the economy now, both in government and the private sector. It'd be a fiasco. It's going to be a lot harder thing to get through for Jerome Powell as well.
Senator, I can tell you, I got my first mortgage, I think in 1980. I would have killed for 10%. Mine was significantly above 10%, actually. It's always a pleasure having you with us. Really helpful. Thank you. That's Senator Mike Braun of Indiana. Now we want to turn to the markets. The stocks are moving higher today. This is Fed Chair Jay Powell just wrapped his testimony. Stocks editor Dave Wilson is here. So Dave, great to have you with us. It's sort of a mirror image, it looks like, of yesterday. I mean, he said the same thing, but the results were entirely different.
It really is. It's like people had a day to absorb the idea that the Fed's bond buying might be cut back sooner than planned. His shift in view on inflation, that it's maybe not so transitory. So you've got a broad-based rally going on, whether we're talking about larger companies or smaller companies. S&P 500 and Russell 2000 indexes both up about 1.5%. We have bonds falling, which means yields rising in the Treasury market, and you've got crude oil moving up. Now, it had been higher as much as 5%. Then, OPEC ministers starting to get get together and, think about what to do with policy. I mean, that's sort of paired the gains. Nonetheless, I mean, you look across energy stocks, they're moving up. ExxonMobil up 2.5%. Valero Energy, one of the biggest refiners, up close to 5%. Schlumberger and Oil Services also up 2.5%. And just an ETF that follows sort of the materials part of the market up 1.7%. But put it all together, it's clear the commodities are showing some strength here.
So, Dave, you've followed stocks for so terribly long. Give us a sense of the relationship between the stocks and the interest rates, because we heard Jerome Powell, the chair of the Fed, today say he thinks they can taper and taper more aggressively without causing real disruption. Is he right?
Well, as far as the markets go, I mean, it sort of looks that way because you look at the interest rate sensitive areas of the market, utilities and real estate, they're among the best performers when you go through the S&P 500's 11 main industry groups. At the same time, you've got financial stocks doing relatively well, and higher rates tend to be a plus for them in terms of their ability to make money on their loans and investments. So when you put that all together, it indeed does look like what the Chair Powell is saying is being received positively.
Yeah, I'm not surprised the financials go up when they think the rates are going up. What about tech, though? I had thought that when the rates go up, tech gets hit.
Well, to the extent that, they tend to be tied to rates as far as, when you buy a tech stock, you're going to have to wait a while for the return. It's all about growth. And so therefore, rates do come into play. I mean, that said, they're holding their own in today's trading. Yeah. And that relationship sometimes comes and goes in the market. And for the moment, I mean, you're seeing some confidence. I mean, it's clear rates are going up, at least if you look at market expectations built into futures contracts. I mean, you see it all the way out to end of 2023, increases bigger than what people were anticipating just a few weeks ago.
So, Dave, as I mentioned, you've covered stocks for quite a while now, and 31 of the years has been right here at Bloomberg. And this is, as I understand it, your last day, unless we can talk you out of it at the last possible second. But you have been such a mainstay for so many of us. And I want to take just a personal note here. A lot of people in television, you know what you see on the air, you know the person and what they say and how they report it. And of course, it's been very valuable to have Dave. What you don't see is what happens behind the scenes. The work that he does for all of us, with all of us, to really keep us up to speed. And a lot of the training that he has done through the years of some of the younger journalists, it's a lot of, we would call it intellectual capital that's going to be departing with you. We're going to miss it terribly, Dave.
Well, thank you. I appreciate all that. I mean, it's certainly been a privilege to be here and to work with so many people over the years, whether it's, being in a newsroom and providing some guidance or in a formal training setting, which I've done, several times over the years. I mean, it's going to be quite a change, no question.
Well, it's been a great pleasure, and we wish you all the best in your new life. You get a whole new life, Dave.
Thanks. That'll be a challenge to kind of figure out what to do with it all, but I'm looking forward to it for sure.
You'll figure it out, I have no doubt. Many thanks to Dave Wilson, signing off for the last Stock of the Hour here on Balance of Power. Coming up, the law and the politics of abortion with Massachusetts Attorney General Maura Healey. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. The U.S. Supreme Court is weighing in today on Mississippi's ban on abortion after 15 weeks of pregnancy. It's a case that could gut the landmark Roe v. Wade ruling. The 1973 Roe case legalized abortion across the United States. A decision upholding Mississippi's law would give states new license to curb abortion access, guaranteeing tighter restrictions in much of the country. The World Health Organization's chief scientist says vaccines will likely protect against severe cases of the new Omicron variant of COVID-19. The WHO is expecting more data on Omicron transmission within days. Meanwhile, the organization warns a blanket travel ban won't stop the spread of the new variant. Tensions over Moscow's military buildup on the Ukrainian border continue to spiral. U.S. Secretary of State Antony Blinken warning today at a NATO conference that the U.S. would impose high-impact economic measures that we've refrained from using in the past, his words, if Russia invaded its neighbor. But Russian President Vladimir Putin shows no sign he's deterred by weeks of warnings from the U.S. and its allies. He's demanded what he terms legally binding security guarantees that would keep NATO weapons out of Ukraine. A witness who says she was sexually assaulted or sexually abused at age 14 by Jeffrey Epstein took the stand in the Ghislaine Maxwell trial. She is one of 4 women who claim they were abused by Epstein as minors and are expected to appear as prosecution witnesses in Manhattan federal court. Maxwell is accused of grooming them for Epstein and participating in some of their abuse herself. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. Let's pick up on that story that Mark just reported on. The Supreme Court today had heard arguments in the challenge to a Mississippi law severely restricting abortions, a case that could lead to the overturning of the 1973 decision in Roe versus Wade. On the law and the politics of this, we welcome now Massachusetts Attorney General Maura Healey. Welcome back, Madam Attorney General. Thank you for being here. Let me put you on the spot because you've given oral arguments. You know how to do them. Let me ask you the question that I understand Justice Clarence Thomas asked right out of the box today, which is, can the court uphold the Mississippi law without overturning Roe versus Wade?
No, I mean, I don't think so. It really is the case for overturning Roe. That is why my office, joined by many others, filed briefs in support of the clinic challenging this law. I mean, this is 50 years of precedent, and were this law to stand, okay, were this law to remain in place, here's what we're facing. We're facing the specter of 26 states banning abortion. We are facing the specter of 36 million, I said million, women being denied access to abortion in this country. It's so serious. We already know from what's happening in Texas, where no abortions are happening. Texas patients are fleeing to other states. Clinic appointments are booked up in those states such that women aren't even able to get appointments within their own state. It's a big deal. It's certainly a violation of privacy and autonomy and fundamentally respect for the dignity and worth of women in this country. And also, it's really going to set us back at a time where over 100,000 women have left the workforce, and workforce participation by women is at its lowest point since 1988. We need fewer laws that are going to keep women from getting into the workforce, staying into the workforce. And that's just an economic argument. But there are so many arguments here today. It is distressing to me. It is sickening to me to think that women's rights like this are being relitigated and being discussed in the highest court of the land as they were today.
So Chief Justice Roberts from the bench indicated that perhaps there was a possibility of redefining viability, that key word in the Roe versus Wade decision, back to 15 weeks instead of the much longer period that was in the original decision. Would that be a way that would protect at least some of what you're after?
You know, why are you disturbing 50 years of precedent? Why don't you understand? Look to your daughters, your granddaughters, your sisters, your mothers, your wives. Understand what access to safe and legal abortion has meant to women and families across this country. And so, you know, they can engage in whatever work they're going to engage in. I hope that they do the right thing here and uphold precedent. But certainly some of the commentary, some of the questions were discouraging to me as a lawyer in terms of what I heard today. We do not give up hope. We continue to fight in every state, and I will certainly continue to do what I can to advocate for legal and safe access abortion across this country. But there is no reason whatsoever to disturb what has been precedent for well over 50 years.
So let me play the devil's advocate, and I hope you'll forgive me for this for a moment, but let's ask you the basic question. Why should this critical issue of abortion be taken out of the political sphere and given to the courts? Because typically, constitutional rights protect minorities against the majority. In fact, politically, most voters, the slight majority of voters, are women. If it's an issue of women's rights, women could vote in their own protection state by state, couldn't they?
You know, I'm gonna illustrate exactly why what you're saying makes sense, but here's what is happening though, David. Here's the situation. 80% of Americans support Roe. They actually support Roe. But what we have is a situation that is thoroughly undemocratic. Look at Texas right now, and look at all the other states that are lined up to do what Texas just did. Look at what Mississippi is doing right now. Look at what South Carolina has done. These are actions by legislatures, Republican majority legislatures, now conveniently gerrymandered, that have law by law written out and curtailed access to safe legal abortion in this country, notwithstanding the fact that the majority of Americans support Roe and support women's access to safe legal abortion. So that's the first thing in the political sphere. It actually, what's happening and playing out in legislature after legislature does not represent democracy and the will of the people, specifically because we have Republican majority legislatures that have been gerrymandered such that it's impossible for that democratic will to see its way forward. Second, we move to the Supreme Court. And the Supreme Court that I submit was essentially stolen by the way that certain justices were able to get appointed and the way that whole process was hijacked. We have a Supreme Court where Donald Trump set out to create a court to do, among other things, overturn Roe. Now, the case is before the court. It was argued today. And again, while discouraged by some of the commentary and the questioning, I have to remain hopeful that the court will see its way through to fulfill its constitutional responsibility and discharge the law as it should, and that includes upholding precedent.
And I must say, we should remind people that we don't want to read too much into the questions for the bench. You can get into trouble projecting what the decision will be. But since we're on the question of politics, I have to ask you about what's going on in Massachusetts politics right now, because we had news today that your governor will not be running for re-election, a Republican governor, by the way, in what most of us think of as a blue state. And it raises the question of your future and whether you might be running for governor of Massachusetts.
Well, I'll say that for another day. What I will say is that I really appreciate the tremendous service that Governor Charlie Baker has offered and will continue to offer to the Commonwealth of Massachusetts. He has been a great partner to me and has worked very hard, and I know will continue to work hard on behalf of residents in this state.
As I said, it is a blue state, perceived to be largely. I mean, you did have Mitt Romney, who's a Republican serving with the Democratic legislature. As a practical matter, do you expect the next governor of Massachusetts to be a Democrat?
Oh, I make no predictions right now. I will say it's a state, of course, where we've had Democratic governors, we've had Republican governors, and each race will be its own race, I suppose.
So you'll have a process about thinking about this. Do you have any sense about when you might know, when you can address it?
No, soon, but really today is about acknowledging, I think, and appreciating the service of Governor Baker.
Yeah.
These jobs are not easy, particularly in these challenging times, as we see across the country, some of the divisiveness, some of the rancor. So important that we have people in office who understand how to get things done in common spirit and common effort on behalf of the people of our states, of our country. And today, I just want to thank Governor Baker and his team for their service. And again, he's got over a year to go, and I know we'll continue to be working really hard all the way through.
I must say, in the deepest, darkest days of the pandemic, I remember listening to some of those news conferences he gave, and it was very reassuring. He was very on top of the issue. Thank you so much. Really appreciate you being back with us. That's Massachusetts Attorney General Maura Healey. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Biden met with CEOs at the White House in his continuing effort to sort out supply chain problems yesterday, and he's about to give remarks on the same subject today. To bring us up to speed, we turn now to our Washington correspondent, Joe Matthew, host of Sound On weekdays on Bloomberg Radio. So, Joe, you got a lot going on down there in Washington, but why don't we talk about the supply chain right now? What are we going to hear?
That's true, David. You know, these remarks were anticipated on Monday when the president met with the CEOs, some virtual, some in person. Think of Walmart. As we talked about this Monday, Best Buy was represented, CVS, the grocers like Food Lion and Kroger were there to kind of talk about prices and supplies heading into the critical holiday shopping period. Those remarks were delayed, but reporters were allowed into the room for a moment of that roundtable. And at that point, David, the president was speaking very optimistically, struck a positive tone, talking about Black Friday, edging out last year as some of these major retailers find a way to work around the supply chain problems. But that was Monday, and a lot has changed since then, specifically with Jay Powell's testimony this week. bringing new questions about whether this administration's spending plans are actually fanning the flames of inflation. So, David, the president's remarks today take on new meaning. He will talk again positively about some progress at the nation's ports since LA and Long Beach went 24/7, lowering wait times for some container ships. But I hate to say it, the variant is the wild card here, as we heard from Jay Powell the last 2 days, potentially threatening growth in the labor market. And the president will likely speak to that as well today, David.
So you raised a couple of very interesting points beyond the supply chain there. They must be talking at now White House right behind you, Joe Matthew. One of them on inflation. I'm not sure what the right answer from the president is. You know, we feel your pain, we're really concerned about it, or it's not a problem.
Yeah.
I'm not sure which one works better.
Well, that's right. And he's found himself caught in the middle of this debate, because it was just a couple of weeks ago the administration was out in full force saying this spending plan had to pass to fight inflation, that it in fact would work to lower prices. We have no reason to believe the president will change his tune on that. But boy, listening to some of the questions for Jay Powell and Janet Yellen the past 2 days, many lawmakers do not believe that's the case. Certainly no Republicans, David. We'll see if the president adjusts his remarks today.
Yeah, and also just finally on the supply chain, it will be interesting to see if he connects up Omicron with the supply chain. It doesn't seem like it would be good news for the supply chain.
That's a big worry, as we heard from Jay Powell and a lot of the lawmakers who were talking to him. I'm going to speak a little bit later on with John Porcari, who was, of course, tapped by this White House to be the sort of port czar and help to get these trucks and ships moving. A lot of questions about the worker shortage, David, specifically for the overnights. Do we have the truckers to get all these goods to stores in time for Christmas? We'll find out.
It's high time to hear from the port czar, no question about it. That's a great interview we'll all want to listen to. That's going to be on Sound Down this evening at 5 p.m. on Bloomberg Radio, brought to you by Joe Matthew. And this is Bloomberg.